What's going on, everyone? 72% of the S&P 500 closed down in the red today as we saw profit taking all across the board. Some of the hottest stocks in the market, like Tesla, started to pull back, but this isn't something that should concern you too much. We have a lot to talk about today as Palantir just opened the doors to joining the QQQ ETF. Powell made some pretty big statements. Michael Burry's newest holdings just got released, and there's a lot of other stuff going on as well. Either way, we have one more day left in the week, so let's end it on a positive note. Tom, we have a lot to get to today, so let's jump right into it.
Yeah, the SPY ended up falling off in a pretty good way today. Like you said, the majority of the market was red. That was definitely a bloody heat map to look at today. But as we look at some of these other stocks in the market, like Palantir, they're popping up in after hours again. And I'll be honest, I thought after today's price action, Palantir might start to break through this support and fall down even lower maybe tomorrow or next week. But with this news, they are actually popping up quite a bit. Like you said, they could actually be joining the QQQ now, which is a pretty big thing to say, or the NASDAQ, I guess, as we would say. So they right now are on the NYSE, or the New York Stock Exchange. So this could be very interesting, Mike. Like it says here, they expect to begin trading as a NASDAQ-listed company on November 26, 2024. So have that on the radar. You know, Palantir continues to stay in the headlines. It seems like this stock is not slowing down anytime soon, but I will say it's definitely pretty overextended, especially if we go to like a daily chart. I mean, it's hard to find daily charts that look like this.
Seriously. And, you know, the company has just been crushing it on like every angle, and the stock is doing great. But like you said, there's definitely like a decent amount of resistance overhead in the short term, and that definitely does present a risk for the company. So if we don't see like a true breakout tomorrow or even early next week, you know, it will be a little bit difficult for this one going forward. But either way, I love it for the long term, and I'm very excited to see how its short-term price action progresses.
Me too, Mike. And whenever I look at Palantir in the short term, there's this big $62 resistance that it's actually been hitting off of the past couple of days. And then right overhead, that all-time high is right around 63.40. And I would just look at 63.50 if you're looking for a good area for a breakout. So that's what I would look for tomorrow. Honestly, though, this resistance here right around 62 is going to be pretty large. I don't think that this news is necessarily going to be enough to get Palantir up and through that, but we'll see how the price action shapes up, Mike. And one thing to also note is that the overall market had such a weird move today, right? If the overall market ends up red tomorrow, that might also like keep Palantir from having the true potential that it could have.
No doubt. And as you talk about the overall market, we can't help but bring up what the big man, Jerome Powell, had to say today. Basically, he said that the Federal Reserve isn't really in that much of a hurry to cut interest rates more, and this is actually a good decision. Basically, inflation has been the major enemy of the Federal Reserve over the past couple of years. Inflation has been coming down, but there's still a very real and a very serious risk that inflation has not been completely eradicated just yet. Basically, Jerome Powell said that the economy isn't really sending like any major warning signs that we have to like boost it even more. So because of that, there's you know, not much of a need to cut interest rates in an urgent manner. As we can see by looking at the FedWatch tool, we can see that there's like a 58.9% chance that the Federal Reserve will cut interest rates again in December by 25 basis points, or 0.25%. So keep that in mind. But realistically, this is a pretty good sign because it shows that the Federal Reserve is, you know, they're getting like I guess you could say they're engineering their soft landing, right? They don't want to boost the economy too much to cause like more of a risk to inflation, but at the same time, they want to supply it with enough growth to keep it, you know, chugging along.
Imagine if Powell didn't make these comments and he came out and he said, you know, this temporary increase in inflation is going to be transitory. I mean, I couldn't imagine what people would say, you know, if he said that, right? And if he didn't say this and have this type of tone, and then we do see inflation start to spiral up a little bit more, people will start to blame him and the Federal Reserve. So I definitely don't blame Powell for this, Mike. I also agree that it's a pretty smart thing to do here. Now, looking at the CME tool a little bit closer, you know, like you said, there's a 58.9% chance of that cut. It's been getting closer and closer, more towards a pause, especially today. This was down in the 30% for a pause. Now we're getting closer to like a 41% chance here, maybe even higher over the next couple days. So I will be watching that very closely. And I would say overall, Mike, with that event, the SPY had a pretty negative reaction. This ended up happening right around the end of the day at 3 p.m. Eastern time, pretty much right where this arrow's pointing. And from that point forwards, the SPY was falling, but it was already negative getting to that point too.
For sure. And then I saw some pretty interesting data recently as well that basically shows that, yes, we all know that the market has been crushing it lately, but when we look deeper into like the actual valuations, we could see that by multiple different metrics, the market is, priced in a way that is, one of the most aggressive valuations that we've seen in over 20 years. Basically, whether you're looking at price to earnings, price to book, price to sales, price to cash flow, or many other metrics, we can see that there's like there's a lot of like aggressive growth priced in. Essentially what this makes for is a situation where, just investors in general are expecting a lot of good things out of the economy and the market going forward. And it makes for a situation where it's like, as we look at, stock prices right now, clearly they are, pretty extended, but they're also pricing in, I don't want to say perfection, but they're definitely pricing in some aggressive growth going forward. So I guess the key thing to understand is that, the market is priced at a pretty aggressive point right now, where it's like if we did see like a little bit of a, I guess you could say a little bit more volatility come into play, especially over these next couple months as like, the power transitions with the newest election, we can see some like craziness in the market that, could present some decent opportunities for like longer term dip buys going forward. Because whenever there's craziness and just like fear in the markets, valuations definitely take a big hit like somewhat quickly. So it's just like something to keep on the radar going forward.
Yeah, and a lot of people have been pretty bullish ever since Trump got elected, and I know lately a lot of people have been kind of shifting a little bit. A lot of people are now talking about a lot of the tariffs and everything like that the Trump administration is going to be doing, and some of the policies that might, like, let's say, hurt the economy a little bit in the short term, but maybe, get things going a little bit over the longer term. But nonetheless, Mike, a lot of these stocks are just so overextended right now. Like, NVIDIA is awesome. It's been breaking out. We've had a great year, right? But at some point, we're going to start to see a pullback, and we've seen good pullbacks on the way up throughout this whole entire run, and some of these pullbacks have been pretty massive, and these are even pullbacks just this year. If we go back to a bigger event like COVID, or even like the last time Trump was in like 2018, there were some pretty big dips that ended up coming in as like Trump took on China with tariffs and etc. So keep that in mind. But I know that it's a pretty broad market, right, Mike? And right now, with the valuation so high, I can't help but just look at some of the bigger players out there, and it was very interesting to see what Michael Burry did today.
Exactly. So basically, we can see that Michael Burry's newest positions are pretty bullish on China. Basically, we can see that not only are some of his biggest holdings Chinese stocks like Alibaba and JD.com, but he's even adding to these positions, and he actually doubled his JD position this quarter. So I thought that was pretty interesting for multiple different reasons. Of course, with some of the recent news with Chinese stocks, like there is definitely more of a risk going forward because if we do see some major tariffs come into play or anything like that, that certainly wouldn't be the best sign for these types of companies. But we all know that Michael Burry certainly doesn't shy away from some unconventional trade ideas. And for those of you who don't know, Michael Burry is like one of the main characters in the movie The Big Short.
Yeah, that's an amazing movie. If you are somebody that loves the stock market and you've never seen The Big Short, you definitely need to see it. It's one of the best ones out there that talks about the 2008 financial crisis, but there's also just some great acting in there too, right? And it tells a great story that, a lot of people learn from. So that would be awesome. But right now, Mike, with Burry buying up the China stocks, I'm sitting here like, hey, what's going on? The China stocks are still pulling back, but, we have to keep in mind that the Chinese government is still boosting their economy. Obviously, they might have scaled back talks on that, but nonetheless, there's still some boost, we'll say, going on, some printing, or like we like to say about Powell. But whenever I talk about China stocks right now, a lot of people are like, are we going to be buying this dip? And personally, Mike, I'm not going to be buying it, at least with shares. I might look at some options, though. BABA actually just touched a pretty major support around 90, and there was a pretty big range last time it was here where it extended down to 70. So, I'm sure a lot of people are going to be looking to acquire some shares down in this range, and I'll definitely be looking to see if Burry continues to add to these positions as these China stocks pull back more.
I think this news with Burry came out at the perfect time because BABA actually reports earnings tomorrow. So that'll be super exciting. We could see on the Friday before open section, BABA's the first one on the list. So definitely keep this close on the radar for tomorrow. When these stocks move, they tend to move in some pretty volatile ways, and that's ultimately a good thing for trading. But also looking at the schedule for tomorrow, we do have some economic data points, but realistically, it's not going to be like anything like too crazy. We have some retail sales data coming out 1 hour before the market opens. This normally doesn't move the market too much, but if the data comes in either much larger or much less than expectations, then we can definitely see an increase in volatility. But one of the most exciting things in the market over the short term has just been the momentum-driven price action that we've been seeing. Whether you are looking at crypto-related stocks or even Dogecoin or Tesla or basically anything else, we are seeing a lot of strong movement right now, and that is one of the best things you can hope for as a trader, because when the market's just chopping around and not really moving too much, it makes it a lot harder to find great opportunities with positively skewed reward risk situations. Some of the craziest movement that we've seen in the short term is with Tesla and some of these crypto related names like MSTR. We could see that over the past couple of days, we've definitely been seeing a shift in the supply and demand dynamic, where basically over like the past week or so, it has just been a euphoric buying frenzy, but now we're starting to see some sellers step in here, whether it be some profit taking or even some shorts slowly adding to their positions. The main takeaway is that some of the hottest stocks from the past week or two are starting to slow down a little bit, and if you are someone who has exposure to these, this is something to pay attention to, because if you do not adapt with these trend changes, it can hurt. So I thought this was very interesting, and whenever we see cool downs and just shifts in supply and demand, especially on crazy moving stocks like MSTR and Tesla, it means a lot because these stocks move big.
Yeah, they definitely do. And I think there's even opportunities to play these down in the short term. Let's say that we shift and we see some good breaks below this key support here, right around 319 to 320 on MSTR tomorrow or even next week. There could be a great opportunity playing that support break. We've been seeing some really good support breaks, like Tesla today broke below a major support right around 320 to 322 and created a bunch of great opportunities in the middle of the day today. So, continue to shift and do that. We had the surge bot today pick up on a ton of these downside plays, and some of them popped off in some crazy ways because calls options have been so overpriced that now it's kind of surprising, right, to see these drop. So now put values are starting to pop up a little bit here.
There we go. As we look at SPY for tomorrow, Tom, it's still very close to its all-time highs, but we are definitely seeing some profit taking come into play here. What are the most important levels to keep on watch for SPY for tomorrow?
Yeah, it was huge today. We ended up bouncing off of 595 very early in the morning, very close to it, and then also very close to 594 there in the middle of the day a couple times. That's a huge range that we mentioned yesterday, and with that Powell news at the end of the day, SPY ended up breaking below it. So we're now moving to the downside in a pretty massive way, Mike. In the short term, I'm really watching the 590 support. I think that's going to be the most crucial support level coming up here in the short term. There are a few more mixed in. I do also like this double top from a couple weeks ago, right around 592, which is very close to the low and after hours here. So I will be watching that as a possible support as well for tomorrow. Below 590, we get into a pretty big range where the SPY got really volatile before, down to 585. So hopefully we don't break below 590, or actually hopefully we do, so that we get some good movement, right? But nonetheless, that's what I'm watching for with SPY as resistance. There's some big levels overhead. 599 keeps holding up in the short term. Plus, with that bearish price action at the end of day today, I don't know that we're going to be able to break back above some of these levels, like that 594, 595 range.
I'm definitely skeptical of SPY in the short term. I feel like it's at a point where it's, pretty extended to the upside and the valuations are aggressive where it's like, now that we're starting to see some profit taking come into play here, I feel like we're starting to like see like an easing in like the amount of euphoria that we were seeing in the market from like just a week ago or so. At the same time, we do have some of the biggest stocks in the market like Nvidia, Apple, Microsoft, Tesla, and others that are like cooling off a bit and that have some serious resistance levels overhead. And when you have like the biggest, baddest stocks in the market and like moving in a way that is like somewhat weak and choppy, it just makes it that much harder for the market itself to move in a strong way because nowadays like the top 7 stocks basically run the show. So I thought that was pretty interesting, but I will say like overall, I'm definitely keeping a very close eye on just like the strongest moving stocks each day. When we look at the heat map from today, the stocks that are like really like sticking out right now are, companies like Tesla and like I know Disney had a big day today as well, but like just like stocks that are like actively moving in a strong way because it's these stocks where like the opportunity is truly at. For example, when you have a stock like, let's say, I don't know, TXN that is up by 0.14% today, there's not really much you can do with that. But when you have a stock like Tesla that's down 6% on the day and it's actively moving in like a powerful way, that's what really like presents the opportunity. So I'm just following the money.
Yeah, Mike, me too. And, I'll actually bring up my Thinkorswim watch list really quickly because there's a lot of different sectors out there in the market, right? The money's not always going to be flowing to the same spots. Today, we saw some pretty bad moves, like even Rivian was down like 14%, right? There was a lot of money flowing out of that stock. On the other side of things, we had Win really popping off today. Like, look at that move at open. This was popping off on a lot of people's scanners and radar this morning and even led my watch list there. So, we saw a lot of crazy movement today. And it's not even necessarily out of those stocks that people think about, or even the biggest stocks like in the NASDAQ or the S&P. Sometimes you have to like search a little bit further for them.
No doubt. All right, Tom, well, let's get right into some setups and predictions then. A stock that is definitely close on my radar is APP, and it is to the downside. This stock has been absolutely crushing it over the past year, and when you go to like a daily or weekly chart of this one, you'll have to zoom out a bit because it is in full rocket mode. But basically what we're seeing right now is, again, a shift in the supply and demand dynamic. The stock tried to continue its upwards trend today, but it got rejected in a very strong way and pretty immediately too. We could see a lot of selling pressure came in right around that $300 resistance point, which is not only an important psychological level, but this is also an area that the stock rejected off of on November 11th in pre-market. So basically, we have a lot of resistance overhead with this stock right now. It's overextended, and we are seeing like a little bit of like a, like a normalization process in the market as a whole. So because of that, APP is definitely on my bearish radar in the short term. I am looking for a pullback here, and I would like to see like a pullback at least to like that $260 area, depending on market momentum.
Yeah, that would be awesome for the next couple days, even tomorrow here. I'll definitely be watching it, Mike. This would be an awesome snipe here at this double top. It's such a crucial level. I love it. With my first play for tomorrow, I'm looking at Boeing to the downside again. Guess what continued today? Boeing, another bad day for them, down 1.3%. I had to check him out again because that was just such a crazy move and break here on the daily chart of that 150 support. So I'm going to continue to watch them down. I will say, though, it's getting a little overextended in the short term. You can see over the past few days, this has been some pretty good selling pressure, and it's been pretty easy to trade it, too. There hasn't been, like, any huge recoveries or anything like that. So at the end of the day, hopefully this continues, but I will be a little wary just in case we do get, like, a move higher, maybe past, like, 140 again tomorrow. Then it'll be a no play.
What is new with Boeing? It literally every time we talk about this stock, it's just taking a beating. Seriously. And now it's at like its lowest point since, what is that, October of 2022. So it's definitely looking rough for this one, and the news certainly isn't too optimistic either. So good stuff there. But another stock that is definitely on my radar is CVX, and it is to the upside. This stock had a pretty good day today, and it showed like a lot of relative strength as the stock was up 2% on a day where some other, you could say like popular like oil and energy stocks like XOM and even Oxy didn't move as much. So with seeing Chevron lead the way like this, not only today, but even over like the past couple of weeks and, even months, and it's a really good sign in my opinion. I really love how consistent the bullish price action was with this one today, and it's getting closer to like some resistance levels not seen since like the middle of this year. So Chevron is definitely on my bullish radar in the short term. I'm not expecting like anything like too crazy out of this one, but there's definitely like a nice steady stream of buyers coming into it.
Yeah, there is. I really do like CVX here. That was a great move today where some of those other oil plays, like you mentioned, didn't do much. So let's go CVX. That's awesome to see here in the short term. With my next play, I'm looking at Enphase to the upside, and I will say I'm adapting up on this stock here. I was looking at it down a few days ago, and it's been falling in a pretty good way. Today, we actually saw a pretty good bounce, or I guess technically yesterday and today, we saw a good bounce and move right around this key $60 support. So I'm going to keep watching for good movement back up, and if we go to the Bookmap, that $60 area has a lot of buyers that ended up coming right back in once we rebroke above 60. So that's going to be a big buy wall to keep in mind now that, Enphase is back above there. And of course, it's a whole dollar psychological level as well. As far as resistance, I'll be looking at $70 tomorrow for a possible target. There's not really too much on the Bookmap until 70.
Yeah, this stock has been getting pounded for like the past couple months, and it's finally showing signs of life. And, it's doing that at like a pretty key level as well, right around $60 a share. So I'll definitely have this one on my radar as well for a potential bounce play. Sometimes bounce plays definitely move in a way that is slower than like, momentum-driven breakouts, but they're definitely ones worth keeping on your radar. So good stuff there, Tom, and I'm excited to see how this one does.
Yeah, I love Enphase here, Mike. And the thing is with these bounce plays, like you don't necessarily need like a full-blown recovery either. It's just necessarily like a play for a few days maybe. You can see in the past where like after some pretty bad moves, Enphase has had some decent bounces like this. So definitely keep it on the radar there as it's around $60. And, if we do see another dip, definitely have your eyes on $60 for maybe another snipe.
All right, sounds good. Well, let's jump right into today's momentum plays. And with the first one, we have Win to the upside.
WYNN, great movement here today. I'm going to go ahead and look at Win for a move above $95. It did break it slightly today, but just look at 95 even.
All right, with the next one, we have Peloton to the downside.
Poor Peloton, pretty bad move in the short term. They're right at $8. So if they break under $7.95, keep watching them down.
All right, sounds good. And then with the last one, we have Amazon to the downside.
AMZN, pretty crazy today as it rejected right off of that resistance overhead. So I'm going to go ahead and look for a move down below the 210 support. If we break 210, I'll be watching it back to the downside.
All right, so we have Amazon and Peloton on watch for potential downside plays tomorrow, if and only if they break below the levels listed. And then we have Win on watch for an upside play. These three stocks are momentum-style setups where the stronger and more consistent they move, the better the setups become. If they don't break the levels listed, don't force the setups. Again, we are looking for strength and momentum here. Be willing and happy to adjust with the trends as they change. So those are some momentum style setups for tomorrow. So we are all clear for today's $845,000 big money trade. And we are looking at ticker symbol TM. So this is Toyota, and the big money bought the 170 strike call options that expire on December 20th of 2024. I thought this was a pretty interesting setup for multiple reasons. First, Toyota has been lagging like a decent amount behind Tesla, GM, and even Ford over like the past couple of weeks and months. At the same time, the stock has been holding like this $170 support area in a pretty strong way, and it's getting pretty close to the support again. There is some like secondary support right around that like $168.50 area, but the main thing is that the stock has been lagging behind its peers. It has some major support very close to it, and the big money stepping in with an in-the-money strike price that has some time to it. So it's definitely an interesting setup. I will say if we do see a break below these support levels, that would be like a major warning sign. But if we can hold this support, the stock definitely has some room, because the next resistance levels are around like 175, 177, 179, and then like up to 180.
Yeah, and I think that the risk-reward ratio is just so awesome here with that support, right? If we end up retesting some of these bigger resistances, like on the daily, like let's say up around like 185 to 190, obviously that would be like best case scenario. But at the end of the day, TM looks pretty awesome here. I love the support. I actually own a Toyota, so how could I not like them, right? But at the end of the day, Mike, Toyota is insane. They're one of the biggest auto manufacturers out there. Like you said, they've really been lagging behind. I was looking at General Motors a ton this morning, and I was just blown away at some of the short-term price action that they've had. So I'm definitely going to be watching them at this support. And the big thing to me is just that risk-reward ratio lines up pretty well. It makes for a really good setup here.
All right, so definitely keep this one on the radar going forward. But before we continue on, we have to give a mega shout out to today's member of the day, Cornish. Shout out to Cornish in the Stocked Up trading floor. You've been a phenomenal member of the community for many years now, and we love having you in the chat and in the community. Huge shout out to you, and thank you for everything.
Yeah, Cornish, you are awesome, man. Thanks for always being there, and I love all the fun stuff you do in the chat as well, right? So thanks for always being here. You're definitely one of the OG members in the Stocked Up community. So let's go, and of course, if you guys want to become a member of the day, post some profits up in the profits channel. We'd love to see those profits out there, right? There were some pretty good opportunities this week.
There we go. So yeah, looking at the market right now, we're definitely at an interesting spot where, generally speaking, the market's still pretty close to all-time highs, but we definitely are seeing some real profit taking come into play here. Remember the importance of adapting. It's easy to make money when everything is ripping to the upside, but the true test happens when when the situation changes. The best trait you can have as a trader is your willingness to adapt. The market is constantly changing, and if you want to succeed over the long term, you have to change and adapt with it. Another key thing is just making sure your risk is managed. Make sure with every single trade you place that you know where your stop loss is, so if it works against you, you can keep that loss as small as possible. We covered topics like this and many more for free in the Stocked Up Discord in the Key Lessons channel, so definitely check that out. There's a lot of great information that could save you a lot and save a lot of time and money. So definitely check that out in the Stocked Up Discord. The link for that will be in the description down below. Besides that, thank you all so much for watching. We have one more day left of the week, so let's make it count.